Hey everyone, this is Mark Treichel with another episode of With Flying Colors. On May 6th, NCUA conserved Jackson Area Federal Credit Union. On May 11th, I did a podcast saying I think there might be a huge problem here, perhaps a huge deficit that was going to cost the insurance fund, perhaps a embezzlement of a larger variety because they had borrowed money yet had no loans. It just didn't make sense. And there were some other red flags. And when you conserve a credit union, you do it for safety and soundness reasons, but this one kind of had a smoking gun effect. I was traveling a little bit over the last week and I got a message from a listener, a nice message saying, "Hey, have you looked at the new 5300? It shows that the credit union had a $95 million write-off and that they were upside down in reserves to the tune of about 71 to 73 million. And I told them that I would take a look at it and do a follow-up podcast. And that's what this is. So in prepping for the podcast 2 days ago, I stumbled across this morning an article by Frank Diekman of cutoday.info, I believe is what his website is. And NCUA has filed a suit against the CEO. So that is now included here in my update, and I'm going to walk through what's going on. But as you can see here, I'm calling this podcast NCUA sues for $95 million and names how the money vanished. Poof, like that. So there is a new federal complaint, which alleges that the CEO, and I'm not going to go into names here, and alleges, everything I say here is alleges, okay? Alleges that former CEO diverted at least $95 million, confirming that my phantom cash thesis was correct, and putting a face on the $77 million deficit the insurance fund now stands to absorb. I do happen to know that they're shopping Jackson area already for a quick resolution. And so next up on the slide, by the way, on the bottom, I say allegations unproven because, again, these are allegations, although we'll find out that she actually appears to have admitted to it. All right. So who is Jackson Area Federal Credit Union? Jackson Area Federal Credit Union was chartered in 1953. It's a MDI, self-designated, and a limited income, serving the city of Jackson and Hinds County employees. The reported profile, it was reported that they had 162 million in assets, 9.2% net worth, but this was the thing that stood out to me, only 28% loan to asset, which was unusual since they had $41 million in non-member deposits. Why did they need that cash? The intervention happened, as I mentioned, May 6th, a conservatorship. And when you see somebody conserved with a net worth of 9.2%, you immediately conclude that that 9.2% might not be there, which is what I concluded. So the previous episode, I talked about the possibility of phantom cash. 66% of assets were in cash deposits, which was implausible. And the fact that they were borrowing money, as I mentioned, where they didn't really need to, and they must have needed that cash for something. And it turns out, indeed, it was fraud. There was fabricated net equity that was also in play that went on the books and that went off the books. And then what also triggered my analysis was that NCUA said that this was an estimated finding, which to me meant there were write-offs coming. They knew they were coming. They had to file to get the data into the system, because they never want to say we didn't get data into the system for one credit union, because that happened once and Congress wasn't happy when they asked them questions. So NCUA doesn't do that anymore. All right. So why is my slide not moving down? Here we go. Why we're back today. So two things have happened. First, NCUA filed a restated call report, the regulator's own number. And again, when you conserve a credit union, you act as the agency, the regulator, you act as the insurer, and you act as the board in the best interests of the members as well. So NCUA went in there, did their reviews, and I think quickly found out that cash was not what it had been reported to for years and years. Second, on June 11, and hat tip to Frank Diekman, NCUA files a federal lawsuit alleging the former CEO diverted at least $95 million and named the mechanism and the numbers on how they allegedly did that. So they restated the books. Then in a sworn federal complaint, they landed on exactly the mechanism that I said they did it by. So sometimes it's better to be lucky than good. All right. So what we now have is that the fraud landed and was taken from where it would normally be taken from, the cash account. First quarter, they recognized a $91.7 million loss, and there was a reduction in cash of $93.6 million. And their net worth ratio went from a positive 9% to a negative 107%. That's just not a number that's a laughable number, a number that doesn't make any sense at all. They're materially insolvent, which means NCUA has to shut them down and will have to pay probably at least $70, $80 million to make this go away. Ironically, that will wipe out all of the savings that Kyle Hauptman's reorganization made. And longer term, when NCUA is doing less exams, which in the short term is good for credit unions, and when NCUA is contemplating, and FFIEC is contemplating changing the CAMELS rating system, which net I think is a good thing, but curtails some of NCUA's and banking regulators' flexibilities to downgrade management. Again, short term, that's a good thing. Long term, occasionally, it's going to lead to some losses. And again, of course, NCUA is not a fraud auditor. There's a lot of where was NCUA, and we tend to lose sight of the fact that a criminal stole a lot of money here, right? But it's easy to look at what happened in a postmortem, and it was easy for me to look when they conserved to say, hey, what might be wrong here? But the Inspector General will have to do a postmortem on that, and I'll walk through that. So this is kind of a chart I put together looking at what was reported in December and then what was restated in March. We had total assets going down 91 million, cash going down 93 million, net worth going down 92 million, net worth going from the best category to the worst category, and they're well beyond the worst category. I mean, this is a fatal adjustment to net worth because nobody can survive that. And so loans, no changes; member shares, no changes; and non-member deposits, no changes. So the asset side imploded. The liabilities are there because they stole the money and they still owe the money to the members and or to the organizations that put in non-member deposits. What's new? The loss relative to the lawsuit. I'm trying to move where this is popping up on my screen here. Okay. So they filed June 11th in U.S. District Court. As conservator, they alleged that the former CEO diverted at least $95 million for personal use, $51 million in false deposits. Entries into the CEO's and her husband's own share accounts allegedly showed funds arriving from outside institutions when they actually came from Jackson Area's general ledger. And allegedly, this goes back to 2015. Now, I think I saw somewhere that the CEO hasn't even been CEO that long. So my guess is there might be somebody else at the credit union who's aware of what's going on here, but NCUA will suss all of that out. And so the signer, well, what happens if you don't have separation of church and state, if you don't have separation of duties? The signer had the keys. The former CFO who became, okay, so here we go. I did have that here. The CFO who became the CEO around 2021 allegedly prepared and signed the regulatory filings and held wire transfer authority. The same filings our previous episode analyzed and questioned, right? So, and they overstated the corporate cash. Accounting entries allegedly overstated funds held at a corporate credit union. The phantom cash mechanism now describes in a sworn filing rather than inferred from the 5300. And I've heard chatter, which may or may not be true, that that the corporate credit union tipped off NCUA. That could be true. That could be just chatter, or that could be somebody trying to control a narrative of some sort. But NCUA, when there's a big loss like this, always gets criticized. And again, there is a rumor, and I will call it nothing more than a rumor, that the corporate did tip off NCUA. I don't know if that's true or not. I don't know who they tipped off, whether it was looked at, what the reality is there, but I just thought I mentioned it because I did hear that. All right. And next slide is not one to come up. All right. So this is kind of when you have these losses, when you're at NCUA or when you're sitting at home, looking at the web or looking at a newspaper, if you're one of those folks who still gets a hard copy of a newspaper, when you read the story and you see somebody stole money, it's kind of fun it's kind of interesting. I don't want to say fun, interesting to see where the money went. So there was alleged personal use of $14.4 million in alleged payments to a single card issuer, American Express, which was one line among many. Their credit card payments, Amex, Apple, Chase, $15 million. Luxury jewelry and handbags at local area Jackson retailers, $3.3 million. Jewelers. Jewelers in New York, Illinois, and California, $1 million. A wire connected to Tiffany's and Company, $378,000. Construction and interior design, $1.16 million. A Steinway grand piano, because when you're stealing all this jewelry and you're building fancy houses, of course, you need a Steinway grand piano to the tune, pun intended, of $129,000. Vehicles, Mercedes, Porsche, Tesla, $193,000. And, of course, they need more than one house, right? Properties in Mississippi and Orange Beach, Alabama. So there is a co-defendant. The husband is named. His account was allegedly received $13.8 million for the general ledger between May 2019 and May 2026, far exceeding his payroll income. So the money in doesn't make sense when you look at what he did. That's basically what NCUA put in the complaint. And the complaint alleges the CEO controlled the account to conceal activity. And there was an alleged admission. So somebody figured something out, and they allegedly confronted the CEO on April 17th, meeting with the board and NCUA. The CEO admitted misappropriating funds and using false entries to conceal it. Was placed on leave, and then NCUA conserved the credit union about 2.5 weeks later. What NCUA is seeking claims include fraud, conversion, breach of fiduciary duty, and D&O liability violations, seeking money, judgments, assets, recovery, disgorgement, a constructive trust, and injunctive relief. A constructive trust. I'm curious what that might mean. I think I might mean, but I'm not going to guess. But that's kind of interesting. And you know what happens when there's these fraud cases and the people confess and they say, how much did you take? They think the number is this much, and it's actually this much because they had to pay dividends on the stolen money, right? And that kind of money can't be recovered from a bond claim. And so, of course, the bond claims, whatever it is, whatever their bond coverage is not going to cover the $70, $80 million, maybe $5 million. But NCUA will net that against the loss of whoever the successful bidder is to take over the remnants of the credit union. So again, I confirmed the phantom assets. It was validated. It's no longer a hypothesis. It's now corroborated twice. The restated books booked the loss on the cash account, and the complaint alleges the matching mechanism, false deposits, and overstated corporate cash. The asset side of my story, my thoughts on the theory hold true. And then the liabilities were the liabilities. I had mentioned the possibility of fake deposits on the other side, but that does not be based on the filing of the lawsuit and based on the filing of the 5300. That does not appear to be the case. So resolution, there's a clean books left, right? Theoretically, NCUA is only offering for sale what they know exists, and they'll be selling that. NCUSIF taking a hit is unavoidable, probably $77 million or more. Of course, if you had less than $250,000, you were covered. If you had more than $250,000, you may be covered depending on how NCUA writes up this deal. There is a way that you can allow those depositors to be made whole if the net effect of everything is the least cost in the insurance fund. But I won't go down that rabbit hole other than what I just said. And then, of course, the IG materiality, they're going to have to do a material loss review because it's 3.7 times the limit. They have to do one over 25 million or 10% of assets. This hits both those. It's probably going to take them a while. They're going to look at when NCUA first became aware. They're probably going to look into these rumors of whether or not the corporates indeed did tip off NCUA, and if so, who they did and what NCUA did in response to that. There may end up being some changes to how NCUA does some exam steps. There may not, but it's going to be a black eye or a red eye on the insurance fund. And if you have 1, 2, 3, 4, 5 of these things happen eventually, and then the credit union industry grows, the way the math works on the insurance fund, you could end up having to pay a premium into the insurance fund. But this in and of itself won't cause that. So I wouldn't worry about that too much yet. So what we look for still ahead. Again, the theory that I had was right. These are still allegations, not verdicts, although NCUA wouldn't say that she confessed if they didn't. So clearly this is going to play out, in my opinion. There will be subsidization of the insurance fund. I'll report more on the material loss review when that comes out, but that's going to probably be a year. I do have some other podcasts coming up on IG reports. I had a previous one on IG reports, but NCUA is not a fraud auditor. CPA opinions are not a fraud auditor. I fraud audit this credit union's asset size did not require a CPA opinion. They probably had agreed upon procedures. And, it's a sad state of affairs that these folks decided to use their local credit union as a piggy bank. But I'm guessing they will be doing substantial time for their crime and or crimes. And I'm going to leave it at that. All right. I got a couple other podcasts I'm going to be rolling out here that I've got the PowerPoints ready for. And this week was, I think, only the second week in 2 years that I missed a current version of the podcast. Again, I had some travel going on, and I'm back in my rhythm, and you'll see a new episode every Monday or Tuesday. You will see on the podcast version only the old evergreen topics that I reissue on Thursdays. And on Wednesdays, don't forget, we've got our other podcast, Credit Union Regulatory Guidance, with an AI voice, Samantha shares. And that talks about audiobook style of NCUA releases, FDIC releases, et cetera, et cetera. All right, that's it. I want to thank you for listening. Thank you for watching. I hope you'll do the same again soon. This is Mark Treichel signing off with flying colors.